Assalamu alaikum students. Here we are with another exercise of statement of cash flow. In this question, we're going to interpret different parts of cash flow statement, doing the comparison between operating activity, investing and financing activity sections. And we will also try to assess the overall cash flow position of the company. So if you see here, there are a few questions which are being asked from question number 1 till question number 7. And then we have overall assessment as well, which we have to report. This company is Masa Corporation, and they have shared with us its cash flow statement. So let's have a look at the cash flow statement first, and then I'll bring you back to the same page. This is 3 years comparative cash flow statement for this company. And if you see here, we have operating activity section and we have loss from continuing operations. Whenever you see income or losses at the beginning, it's an indication that the company is using indirect method for the reporting purpose. For the 3 years, consecutive years, they have losses from the continuing operations. It means that their operations are not generating enough income. And then depreciation, amortization is also there, and then gain from the sale of investment and other assets. They get some gain, means they are selling their capital assets, and then restructuring and other unusual items are there. Then accounts receivable, inventory, and other current assets, if you see, they all are increasing. The operating assets are increasing. It means that they are not bringing the cash flows for the business. Accounts payable and other current liabilities, they are decreasing. We have net cash flow from operating activities. Moving on to investing activities, we have investment in depreciable assets. Company has invested more, and then they dispose of some of the assets, and also the sale proceeds from the sale of discontinued operations is there, and also company has invested in the capitalized software. Then financing activity section, you can see that the company has taken a long-term loan, and also they have paid some part of the loan. They sold the shares and they purchased back the treasury shares as well. For the 2 years, they give the dividend as well. Overall position, if you see here in the operating activity section, it provides the cash. Investing activity section is also providing the cash for the 2 later years, but for the first year, it was the usage of cash. And if you see here in financing activity section, the year 2 and 3 is using the cash, but the first year was providing the cash. Next, because we have a look into an overview of these statements, so let's see one by one all the questions and try to answer them. So the question number 1 is, what were the firm's major sources of cash and its major uses of cash? They are not referring to one particular section. They are asking about overall statement. So it's better if you make a comparative table, and means for 3 columns you can make the comparison, and for every year you can say what are the sources, what are the uses. So let's check over here. So if you see here, the major, I'll try to fit in this. Okay, so if you see here, students, the major sources of cash are, they have disposed of some of the assets in 2011. Also, they have disposed of some of the assets in 2017 and 2016 as well, and 2018, sorry. All the 3 years, major inflow is because of this. Then they have sources from the long-term loans. If you see here, for all the years, they under the financing activity section, they are borrowing the money. And then after that, they in 2017 and 2016, they have some discontinued operations as well. Sales from the proceeds of discontinued operation over here, it's the biggest source of inflow in 2017, also in 2018 as well. Moving on towards the major uses of cash. So if you see here, we have accounts payable for which we are paying. Then for the capital expenditures, we are paying over there as well. And then the company is making the payments for the long-term loans. Also in 2017, company has paid the short-term borrowings back, and the dividends in the first 2 years is also the uses of cash. So like this, you're going to segregate them. Question number 2 is what is, let's read it out. Was cash flow from operating activities greater or less than the net income? Explain in details the major reasons for the difference between these two figures. Now they want us to compare the cash flow from operating activities with net income. So only the operating activity section will be having a discussion over there, and we don't need to refer to investing and financing activity section. So let's go back to the operating activity section. Okay, so it's very obvious that cash flow from operating activity is positive, and so means we have got our the operating activities has provided us the cash. But if you see here, we have losses in all the 3 years. So of course, cash flow from operating activity is greater than the net income. We don't have net income, we have net losses. What are the major reasons? So major reasons are the huge amount of depreciations, amortizations expenses, then accounts receivable, inventory, and other current assets and others. They are the sources of cash flows, or they provided the cash, or they have increased the cash. While the uses of cash includes the adjustment of the losses or the gains on sales of assets, also the payments of the current liabilities is the sources of the uses of the cash in the operating activity section. So these are the major differences between the cash flow from operating activities and the net income. Next question is, was the firm able to generate enough cash from operations to cover the capital expenditures? So answer is clearly no, because if you see here in the question, cash flow from operating activity is 125,000 in 2018, but we need means uses are here 129,000, and the investment in software is 27,000, and other is 6. So basically it was not enough in 2018. Same is the case you can find out in 2017. 89.3 was the cash provided by operating activities, but needed was 174 plus 43 plus 13, so it was not enough. Okay, then the next question is, was the cash flow from operating activity was covered both capital expenditures and the dividend payments? So when in question number 3 we already said that it was not enough. So of course for the dividend payments it will not be enough, because here they said capital expenditures and dividend payments, right? If it did, what did Marsha do with the excess cash? Students, here we know that it did not, it's not enough, but still we know that some money which Marsha has borrowed through the long-term financing, they have invested in additional investments, or you can say in other companies or affiliates investments. Can you see here, investing activities, company is investing in the software, sorry, not affiliate, in the software company is investing, right? So they would have invested here, which actually operating activity did not provide it, so that's why they have borrowed the money. Then next is question number 6. If not, what were the sources of cash the company relied on to cover the capital expenditures or dividend? How did company pay for its capital expenditures and the dividend if the cash flow from operating activity was not enough, so of course company has used some of its financial support by borrowing the money. Also, if you see here, company has sold out some of its unused assets, and also its discontinued operations are the sources of cash for the company. Also, company has borrowed the money. Can you see here in under the financing section? The final question is question number 7 is what the working capital account primarily source of the cash or the uses of cash. Now, what are the working capital accounts? Working capital accounts are current assets and current liabilities, right? So they say that they use the cash or they were the sources of cash. So let's check out here. These are the working capital accounts in the operating activity section, and you can see here most of them were the sources in 2018, but yes, accounts payable has used the cash. In 2017, accounts payable as well as other current assets has used the cash, and in 2016 most of them were using the cash. Okay, so this is how you can compare the working capital accounts as well. So this is it about the discussion for question number 5.1.